Hey guys, Max here, and this is your daily update for yesterday, the 24th of February. It was, of course, absolute chaos in the markets. There was loads to talk about. American and European equities dropping loads and then seeing a major rally later in the day. Russian stocks seeing the single worst day in their history. Some major changes around foreign exchange and currencies as well, and huge volatility in the crypto market as well. Right now, we're just going to talk about the markets themselves, and then later on today, I'll put out a second video just talking about Ukraine itself, the crisis, the war, what's happened so far, and how it's all looking. So let's just get right into it. Now, of course, Russia invaded Ukraine and surprised a hell of a lot of people, and markets really didn't like this. So by and large, they took major hits. Now, this happened overnight, so American markets were closed, but futures were hit really quite hard, down more than 4% at some points, but they recovered slightly as markets actually opened, with the S&P 500 opening down just under 2% and the Nasdaq down about 3.5%. We saw some larger than that drops in European markets. In the UK, the FTSE 100 was down about 3.5% across the entire day, and the DAX was down about 5%, and the Stoxx 600 was down 4%, so some major losses for a single day of trading without a doubt. But then, of course, we have to look at what happened in Russian markets, which we don't usually cover, but their index, the MOEX, and the Russian ruble as well, pretty much tanked. The second the invasion started, Russian stocks started to tumble and they fell huge amounts. After they were down about 20%, the Russian authorities closed markets to try and stop the rout, and they also banned short selling to try and help the situation, but it really didn't do much good, except for maybe slow the crash down by a few hours. The index was down over 45% yesterday alone, and it's now down over 50% from its all-time highs. Now that is obviously an absolutely major hit, and it is the single worst day for Russian stocks in history, and one of the worst days for any market in history as well. Just imagine if the S&P 500 had fallen by 40% in one day, it would literally seem like the world is about to end. Overnight pensions would disappear, retirees would find themselves unable to afford their lifestyles, and financial institutions laden with debt would go bankrupt. Now, the Russian ruble, the currency of Russia, of course, fell about 8% in value again almost instantly on this news of invasion, but it did go on to par some of its losses, and it's now only down about 3% prior to the invasion itself, but that's still 20% down from where it was a couple of months ago, so it's really not having a good time of it. Now, another major hit to the Russian financial system comes as Russia's bonds lose huge amounts, or in some cases, literally all of their value. The specific news here is that UBS cut Russia's bond value to zero yesterday, instantly triggering margin calls for the clients who owned any Russian bonds. Of course, as bond values go down, yields shoot up sky high, and the yield on Russian bonds has just exploded. Prior to this whole situation and escalation in Ukraine a couple of months ago, Russia dollar bonds were sitting at about a 2% yield before it all started. About a week or so ago, they were sitting at about a 4% yield, so they had doubled, which is a major increase on its own, but as of today, they are sitting at about 20%. Now, what exactly does this mean? Well, it means it's going to be incredibly difficult for the Russian state to sell bonds. UBS dropping the value of Russian bonds to zero is actually huge as well. Their clients who held Russian bonds, who are more than likely to be Russian, just saw their investments go to zero instantly, and if they had margin or leverage on their account, they actually went negative. Now, if this were to happen amongst all or even just a few other major banks around the world, the Russian state would probably just go bankrupt and insolvent, and it just wouldn't be able to function. Now, volatility was not limited to just traditional financial markets, of course. In crypto as well, we saw huge volatility that started the day off with major losses across the board. Bitcoin was sitting at about $38,000 before the invasion started, but as it came, it crashed hard along with the rest of the equity market, dropping 11% down to $34,000 at one point. Ethereum saw a similar decline, falling 13% from above $2,000 to about $1,700, and of course, the same sort of thing was seen across the board in the altcoin market, with most coins falling something crazy like 15 to 20% over about 10 hours. Now, this is actually to be expected. Much to some Bitcoin maxis' dismay, crypto is, as I've said time and time before, a risk-on asset, and it behaves as something akin to a very risky, innovative tech index that would be seen on the Nasdaq. When fears come through and investor risk sentiment deteriorates, people sell their riskiest assets first, which usually means crypto. And when risk sentiment gets better, people buy back into potentially lucrative investments like crypto. Now this is, however, where everything turned around for the day and we started to see major losses replaced by major gains. Now there is a very good and very simple answer for why we saw this shift, and in short, it's because sanctions targeting Russia are again, no surprise, a little bit too weak, weaker than markets expected, and they will have next to no impact on our markets, so fears have evaporated and investors have rushed to buy the dip. Now we will get into the details surrounding the sanctions in a moment, but before we do, just how strong was this rebound? Well, the S&P 500 rose 3% from its dip and actually finished the day up 1.5%. The Nasdaq saw a huge rally as well, pumping up 7% from its bottom and finishing the day up 3.3%. European markets were slower to react and didn't actually see a major rally yesterday, but as of this morning, that rally has started to arrive, with the FTSE 100 up 2% in the first couple of hours of trading and the Stoxx 600 up 1.8% so far today. Crypto shot up just like equities did, and most coins rose something like 10%, following their dip as well. As of right now, as I'm making this video, Bitcoin is sitting at about $38,000 and Ethereum is sitting at $2,600, just below where it was a couple of days ago. Bitcoin almost exactly where it was a couple of days ago. Now, unlike Bitcoin, most altcoins haven't recovered to exactly where they were, but they have pared back some of their losses. Now, oil prices rose as you would expect, with WTI crude sitting at $93 a barrel and Brent crude sitting above $101 a barrel. Gold prices spiked a massive amount on news of the invasion and they peaked at almost $2,000 an ounce, but they are now back down to around $1,900 an ounce once again. Now, as I said earlier, this is all really about sanctions levied by the West against Russia and how impactful they are, and basically the markets thought they would be stronger than they are. So why are the markets so optimistic about what they've seen? Well, the first thing to talk about is SWIFT, which is the international banking system that basically allows people, businesses, or banks to communicate and exchange with each other overseas. Bank transfers, foreign currency exchanges, basically almost anything financial is run and verified through this system when it crosses borders, and without it, countries would really struggle to trade with each other. Now, the West has been warning Russia for months now that they can ban Russia from SWIFT, which would probably be absolutely crippling for the Russian economy, and by some estimates could cut their GDP by 5% every year. Now, this has been seen as the biggest, baddest sanction that the West has to deter Russian aggression, and the only reason we didn't see it used half a week ago when Russia sent troops into Luhansk and Donetsk is because they were saving it in case Russia invaded Ukraine as a whole. Well, Russia invaded Ukraine, so instantly the markets were terrified that SWIFT would be withdrawn from Russia, and the markets routed. About halfway through the day, though, it started to become clear that there was a problem here, and it doesn't seem that SWIFT will be a bargaining chip at all. Germany and Italy are putting up fierce resistance, and they are refusing to allow SWIFT services to be withdrawn. They are not allowing this sanction to go ahead for a few reasons that we'll get into in a moment, but in reality, it comes down to weak leadership. Now, the UK and the US especially are pushing hard for these sanctions by all accounts to cut Russia off from SWIFT, but as SWIFT is based in Belgium, it abides by EU law and it needs every member state to agree to this plan, and Germany and Italy seem to be the ones holding everything up. Now, there are a few main reasons for this. The first is that it will damage the business prospects of some European companies who work with Russia. It will make transacting, getting paid, and doing anything in Russia far more complicated, far slower, and just more difficult and less efficient. If you remember a few weeks ago when tensions were building, the 5 CEOs of Italy's biggest companies went over to Moscow and they met with Putin to discuss how they can continue to work together as tensions rise. This was to the dismay of everyone else in Europe, but really this is why Italy are opposing this measure, because there is money at stake and their leadership is incapable of looking past the next year or two into the future and making the right decision. Now, when it comes to Germany, the reason is of course gas. SWIFT is used to pay for the energy that is imported into Europe from Russia, and Germany is fearful that cutting Russia off from SWIFT would mean that the gas would stop flowing and Germany would run dry. Now again, this is a legitimate fear, and cutting Russia off from SWIFT would probably spike oil and gas prices. But in reality, Russia is in no position to just outright stop selling their natural resources. Yes, they have an agreement to trade with China, but that doesn't seem like it would really be sufficient to keep the Russian state solvent. Again, here we have weak leadership that is unable to make a hard decision and is instead just kicking the can further down the road, refusing to stand against Russia today, which will only make them get stronger in the future and make the problem worse then. Finally, there are some fears across Europe that if Russia is cut off from SWIFT, that loans made out by banks to Russian institutions would go unpaid, and that amounts to about $50 billion, which European banks would have to swallow as losses. There are also assets owned by European banks or institutions held in Russia that could be at risk as well, so the SWIFT ban isn't really coming, and markets are really happy about this, so they're rallying. But stronger sanctions have come into place, and they are better than I thought they'd be, to be honest. They are targeting plenty of Russian banks, institutions, and oligarchs, which is the right direction to go in my opinion. But what exactly are they? Well, the US is targeting some banks and institutions, including Russia's 2 largest banks and 3 others as well. They're putting into place debt and equity prohibitions against state-owned entities in Russia, and then they're targeting some oligarchs, some powerful people across the country. The target here is to hurt Russia's finances without spiking energy, oil, or gas prices and causing more inflation in America. Now, the UK has actually done something right for once and has put some really strong sanctions into play, which is good to see because the set of sanctions they put out earlier in the week were rather pathetic. Firstly, they're putting into place an asset freeze on all major Russian banks and Russian companies will be banned from raising capital in the UK, and the Russian state will not be able to raise any new debt in the UK either. Over 100 individuals have been targeted. Again, the oligarchs, the wealthy, the politicians, and lots of CEOs, the people who have influence in Russia. Russia's biggest airline is banned from UK airports. All exports that could have a military use like vehicle parts or computer hardware is to be banned as well. And in a few days, there should be more legislation to ban exports of high-tech industries as well, like semiconductors. Russian nationals in the UK are to be banned from depositing more than £50,000, about $70,000, into UK bank accounts, which means normal Russians living in the UK will be fine, but the wealthy will not. And then the UK is pushing an economic crime bill to target illegal Russian money in the UK as well, which means those apartments worth millions of dollars in London owned by Russians, well, they're not necessarily going to be safe havens anymore, and all of these sanctions apply to Belarus as well. Now, honestly, that's actually quite a comprehensive list of sanctions, and by all accounts, it should impact Russia rather effectively, and targeting illicit Russian wealth in the UK was something I've been calling for recently, but I didn't actually expect to see it coming. Now, from the EU, sanctions are coming as well. Export controls on high-tech goods, Russian banks to be targeted, limits on bank deposits for Russians, and barring Russians from investing in EU securities, though all of this needs to be agreed and finalised by the EU, which could go awry, as we all know. Basically, what the West is trying to achieve with these sanctions is the same impact that banning Russia from SWIFT would get, but without actually having to ban Russia from SWIFT. Whether these sanctions will actually be that impactful is yet to be seen, but there is some optimism that they will have a serious influence here. Now, later on today, I'm going to put out another video looking at the conflict in Ukraine itself, what's going on, how it's progressing, and everything like that. Now, I know a lot of people who watch this channel think I'm purely a finance guy, that I should stick entirely to that, but I actually have a degree in military history. I've read an awful lot about an awful lot of different conflicts over the years, and I will be joining the British Army in about 14 months' time, so I do feel like I have an insight into what's going on, and well, it's my channel anyway. So if you want to hear my thoughts on the conflict itself, that video is coming later today. If not, then don't click on it. Don't watch it. No one is forcing you to. This isn't Russia. That is it for the day, guys. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio, and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world-famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up. You don't have to buy anything. You don't have to hand over any card information. So if that sounds interesting, then make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.